Hello, my name is Paul. I am the president of Candle Charts, and joining me here in this great session is Steve Nissen, the CEO and founder of CandleCharts.com. In today's session, Steve will be doing a trade analysis based on submitted trades that you, our students, have sent in via the form. We will and are recording today's session, and we'll be sending out the recording after the session is complete. We're very excited about analyzing trades that our students have actually made. In this process, we sent out a form and we had a lot of people send back information. It is great when we get feedback and a few people actually between yesterday and today, let me know that they've been profiting in the markets based on analysis that we do on a regular basis inside of my candle charts and by using our software called Nissen Candle Scanner along with all of our education and everything else. So it's great, but just realize there's always a way to improve upon your trades, and that's really what today is all about. So even if it was a great trade, how can we improve it even more? So Steve's been, as you can see by the slide on the screen, Steve's been doing this for decades. He is the person who brought candles to the Western world. He's been an advisor to top institutional firms. He's spoken for the World Bank and the Federal Reserve, author of 3 different books translated into, I believe it's a little bit more than 15 languages last time I heard. And we're really excited to listen to Steve's analysis. So, Steve, I'm going to mute and watch you do any analysis, and I will be on later to answer questions. Steve,
Great,
over to you.
thank you, Paul, and it's a pleasure being here. And we have a spectrum of markets. We have equities, we have a Forex market. They're mainly daily charts, and keep in mind that whatever I go through with these specific real-world trades, you can apply to your markets. Whether it's intraday, daily, weekly, no matter where you are in the world. We have 85 countries who are students of CandleCharts.com. So let me show you the first one. I'll go over what these lines are in a minute, but this was actually from Heather, and she did a trade in HPQ, and the arrow here shows when she initially bought it, and I'll go through her ideas on this. And this is when she lightened up the position, and this is when she exited the position. So I'll just quote you. I'll do a little partial quote here. So on March 14th, she set an arbitrary buy limit at 27.71. Ideally, we like to have a reason for doing a buy, but she said, an arbitrary buy limit. And it was nicely confirmed with this green wrapping around the red. Not quite a bullish engulfing pattern. Normally a bullish engulfing pattern must come after a downtrend. This was not, you could say it actually was a little bit of an uptrend, but it was nice bullish confirmation. And then I'll go through my feedback on the trade. Obviously it worked out pretty well. And then she said she sold a large portion over here because of the dark cloud cover. Good strategy. And she did have a target of 29.75. So when she bought it here, she had a target of 29.75. I guess that was right around here, but she did let some profits ride, and she exited the rest of the position right over here. No, in her mind, no bearish signals, but she did get to her target. So let me go through this particular trade. One, it's a compliment to Heather, and something everybody should keep in mind is when you do a trade, always think of the risk reward. Okay, so she initially got into the trade here. Again, didn't give an exact reason, but she got here. I didn't see us. I don't think she mentioned a stop. Let me see. Yet she had a stop loss at 27.20. Okay, here, just below the previous falling window. Okay, so she had a stop loss at 27.20. So she bought it here, and she had a stop loss here at 27.20. There was a little rising window, so I guess she did it under the rising window. Personally, what I would have done, again, this is very subjective, I probably would have set a protective stop under here, because if you set a protective loss stop at 27.20 over here, you still have support here. So you're only risking another 20 cents wouldn't it be a little bit disappointing to get stopped out over here, only to have the market, I guess she did, I don't know, she probably did not get stopped out, but to get stopped out over here, only to have the market maybe get to here and then rebound. So I personally would have done down here because she had such a great risk reward. Now, I probably would have had the same reward target. I would have been looking at this resistance area here. So I think that's what she got around, that target. What did you say it was? She had a target of 20. Oh, this was her target, 27.21. So she had a target over here. Let me make sure. Go back here. Oh no, sorry, 29.75. That was her target. So her target was probably based on this, and she did get confirmation with the dark cloud cover, and she did let some ride, and she exited the rest of the position over here. Now, I personally think that's a great exit. She didn't see any bearish signals, but I do. Long upper shadow, not quite a shooting star. Also, notice this resistance area here. I'm going to draw it like this. Okay, see how the market got above the resistance zone over here and here and couldn't hold above it? That's actually a little bearish. That's called the falling off the roof. But a very nice trade. She had the right idea. Again, she didn't say why she got in. It was arbitrary, but it was nice to be confirmed here, and then a hammer right over here. So all in all, a nice trade. I don't think it would have done much different. Okay, let's go to the next one from Jim. All right, this is a little shorter term trade over a couple of days. All right, so this is on SH. And again, doesn't matter what market, what time frame. So he bought over here, and he bought on the hammer and a rising window. Good call on that. Two bullish signals here. So and the blue line here is actually the price he bought. Okay, right around 15, and he exited at 15.25, and cover all the remaining shares. Okay, and what he did is set up there, so he covered all the remaining shares if the trade was stopped out. So he locked in a profit. I love doing that. As soon as the market moves in my direction and I could break even, that's where I'll move at least part of my stop. So it's no risk trade. It's the market's money. It's not mine. So let me go over the strategy here. All right. So Jim did not give a risk reward. That is on a lot of the input we got here, unless they forgot to do it. 3 criteria I would choose. 1, does a candle signal confirm a Western signal before initiating a new trade? 2, what is your risk reward? And obviously 3, the candle signal itself. So a lot of things going in his favor. Number 1, the hammer, confirming a support area, and the rising window. Now, the problem with the rising window, you don't know it's a rising window until the end of the session, because the market could gap higher in the opening, but if it moves down here intraday, it's not a rising window. And he exited, no bearish signals, but it was a resistance area. Okay, the way I would have looked at this is I would be looking at risk reward. Personally, if I bought it here, actually I wouldn't be buying it here, because the risk is down to like 1470, right? From 15 to 1470, that's your risk. And the target, now your target might be different, I'm sure Jim's might be different, is up here. So to me, this is like a 1-to-1 risk reward. I personally would not have done that trade. I would actually be a little bit more comfortable buying on this hammer from a risk reward, because look at all the support you have here. The hammer broke under this support area, under 1480. It could not hold below it. That is called a crack and snap. It shows the bears could not hold control. And with the crack and snap, the target is the preceding high, which is over here, which is exactly where the market got. So good trade all in all. For Jim, again, I would have done a little differently. I would have bought on the hammer because he had great support here. I would have had a stop under the low of the hammer. Maybe could add to a little bit to the long position with the rising window, but I would have had a stop under here, and my target would have been here. No real bearish signals here, but it did get to the target, and I definitely would have lightened up on some long positions, move up to the stop. And then if I was still long here, even though it reached my target, once the market gapped down, I'd be out of the rest of my long positions. So all in all, good trade. I think the risk reward could have been a little better, but I'm glad it worked out. Okay, let's look at the next one. Okay, this is XLK, and this is from Larry. So on March 2nd, he bought right around 136, bullish engulfing pattern, and he exited at 144 at the bearish engulfing pattern. So some thoughts on this. One, no risk reward, and there are different strategies. Some traders will get in on a bullish candlestick signal and exit on a bearish candlestick signal. Again, I personally always like to look at risk reward. Not quite sure how Larry got in at 136 because he said he got in on the bullish engulfing pattern. Because, unless the market, he bought it intraday, but it's not an official bullish engulfing pattern until the market closes. So if he bought it here, you don't really know it's a bullish engulfing pattern until here. So really, to base a candle signal on a bullish engulfing pattern, you really should wait for a close or the next session's opening. Another option is during the session, there's a daily, if it gets above the red candle and it's a potential bullish engulfing pattern, like over here, you could think about buying it. And then if it closes the day not as a bullish engulfing pattern, you could exit the position. But even if this was not a bullish engulfing pattern, look at all the support here. So the fact that it was a bullish engulfing pattern at the end of the day just reinforced, and this is something I really like to see. Like I said, one of the two criterion that I look at is a candle signal and as a confirmed support or resistance. It's obviously confirmed support. So the market rallied. I personally, the trade worked out well, but I personally would have lightened up over here a little bit with the shooting star. Why do you think I would not have gotten out of all my longs, even though this was a bearish signal? What did we have over here? Rising window, right? So the trend was still up, a little bit more neutral because of the shooting star, but the rising window make the trend positive. This was a negative. So I probably would have lightened up on my position here, or maybe even exited, or lock in enough profits to pay for the trade. But Jim did it up here. And let me see what else he said. Okay, and he exited on this trade here, right around 144. Great trade. Again, he said, not quite sure how he got this. He said it was a bearish engulfing pattern, but it's not a bearish engulfing pattern until the end of the day. So, however he did the 144, it was a good trade. Once again, the thing that he missed, although the trade worked really well, is no risk reward. So personally, I would have done it as, if you buy it on this bullish engulfing pattern, what would my target be? And what would my stop be? My stop would be on a close under the bullish engulfing pattern. So it got under the bullish engulfing pattern here, but it didn't close under it. And my target, only because there was so much resistance here, would be up here, and I probably would have exited on this shooting star. So from risk reward, if you buy, even if you buy in the close at 136, you risk 134.5, you risk $1.50 to make $5.50. That's a good trade. So I probably would have exited on, or right over here, but he exited, and perfect reason to do so, on a bearish engulfing pattern, which confirmed this resistance area right over here. Okay, so the next one, okay, Netflix. Okay, and actually he shorted, and that's one of the great, he did a put, and I'm not going to go into implied volatility. In my CC, Paul will be talking about our paid member site as well as our candle scanner, and we do have option strategies. We have an option update we do each week, but one of the great things about options is obviously you can play bear positions. So this is from Makish, and he did a short on February 9th. He bought a put. And for those who know options, what's great about when the market moves down, if you're going to put, implied volatility usually picks up more than it improves. If you're bullish and the market moves up, implied volatility really picks up nicely in bear markets. Anyway, so he short here, dark cloud cover, perfect, confirming resistance area, confirming a shooting star. and he exited on February 27th over here, and due to the rising window. So he was looking for a bullish signal over here, a tiny rising window. And I don't have NCS on here, but if you had NCS on here, you would see the small rising windows. Sometimes, for those not familiar with picking up windows, I'm so used to seeing them, I see this, but one of the great things about using the candle scanner is that you will not miss any windows. I don't need the NCS because I know what the window looks like. I'm so used to it. So the rising window is a bullish signal, and that is where he exited. Great trade. Once again, the only slight criticism is, unless he had it, but he didn't put it into the feedback form, is what's your risk and what's your target? So coincidentally, his risk, my target would have been the same as his stop out area, but let me go through it. So here we have a dark cloud cover. Now, if you're in a short position over here, where would you set your protective stop? Would it be the high of the dark cloud cover? Or would it be somewhere else? And there's no 100% answer, correct answer. There's a lot of subjectivity. Okay, would you set your stop above 375 or somewhere else? And my thinking is, especially since it's an option, and depends on what how much in the money it is, and applied volatility and stuff like that. I probably would have set the stop over here, above the high of the shooting star. Okay, so instead of 375, I may have made it 382. Because again, even if it gets above the high of the dark cloud cover, isn't this still resistance? So I would have set a protective stop up there, and my target would have been minimum target. Quick move would have been here, but a more substantial move would have been to this area over here, this important swing low. Now notice made a long lower shadow, no hammer, but this was the longest lower shadow that it had during the decline, so it shows some buying demand. And notice a very small real body, a little tweezer's bottom. So two lows at the same price, confirming the low here. So a really tentative sign of stabilization, then the rising window. So I definitely would have been out on my short position. Obviously, no way to know the market's going to move down, but it was overall, it was a very good trade. And again, I'm just emphasizing, really important. The only thing that some of you missed, even though the trades worked out well and the rationale was good, always think about the risk reward, because you can have great rationale, like in other words, the dark cloud cover is confirming resistance. But if your target is like over here, it's not a good risk reward. Okay, now we'll look at a Forex, and coincidentally, another short position. And just like options, Forex is great for short positions. So this is from Sean, and he went short on May 3rd, which I think it was over here. Okay, it was at resistance, a resistance area, nothing wrong with that. So May 3rd, and he exited here on the bull Harami over here. Once again, we really need a risk reward, but let me give you my thinking on this. 100% correct, in my opinion, okay, to do a short anywhere around this area. What I would have done if I was going short, I would have done it very lightly, because yes, the resistance is being confirmed. There's a dark cloud cover here, resistance area, but are there any bullish signals with this green real body? No, this was actually the highest close for this entire move. We moved higher here, intercession, but this close was higher than that close. So this was the highest close. So there's still strong bullish momentum. So fine to be short here, but realize you're going short on a bull candle. And if you are doing short, maybe I'd do 25% of a position. This is when I'd get more aggressive. Here you're having the bearish confirmation, a dark cloud cover, right? But what do you think the problem is doing the trade? Remember, for the dark cloud cover, you have to wait for here. What do you think the issue is with doing the trade on that dark cloud cover? Remember, one of my most important rules, risk reward. So once again, candles don't give targets, so your target might be different. I personally would be looking anywhere from around 109.40 to maybe 109. Look at all the support going back weeks and weeks and weeks. So if you sold it here and you're risking this amount, like let's see, because you're risking too high, I'd risk up here. So the risk would be from 110 to about 110.80. And my target, kind of conservative, would be from 110.60 to 109.40. That's not even a 2-to-1 risk reward to risk. I personally would stand away from the trade, or if you did it, very, very lightly, because it's really not a good risk reward. However, if your target, whatever reason, say you're using moving average or some other indicators, long-term trends, maybe an up channel and a bull in a weekly chart, and your target is down here, maybe towards this bullish engulfing pattern, then it's a great trade. But net, all of you did really well. I think the strategies were good, but if I had to have you take away one thing from this trade analysis is, yes, it's great to get the candlestick signals correctly, but make sure it confirms a Western signal, whichever Western signal you use. And very important, always think about the risk reward. And so I'm going to turn it over to Paul for a minute. He's going to go over the NCS. It's a great way to have you find candlestick signals automatically, literally within seconds. This is the only candle scanning software designed personally by me, so you know it's right. I spent a long time refining it, and the member site, the paid member site, where we do daily updates, chart challenges, strategy sessions where you give me you give us markets of your choice. But I'll have Paul go into it. So hopefully he took a lot away from this. And one of the great things of having this as a video is you'll be able to review this over and over again. And by the way, everything we do in my CC on the member site, all our updates and everything are accessible by video. Okay, that's how most people actually watch it. So over to you, Paul.
Great, thank you, Steve. If you can go back to Nissen Candle Scanner slide, that would be good. Thank you. So first of all, I want to thank the students who did submit their trades. I know sometimes it can be a little daunting to have their trade be analyzed by Steve Nissen and everything like that. So thank you for those that submitted your request, and thank you to Steve, obviously, for analyzing those. But I can see who the students are that participate in things like my candle charts and small group coaching and utilize the software, and they really do get a lot out of it. So I can see that the thoroughness of the forms that did come in, and I kind of recognize a lot of names of people that did fill those out. So I want to go over real fast the two different tools that we used here, or Steve used in his analysis. First is Nissen Candle Scanning Software, and that's what you have the image on the screen right now with the link candlecharts.com/NCS. I know there are people in the room that obviously have it already. If you don't have it and you're interested in trading and actually doing well in trading, this is the powerful software that you need and want to have. Nissen Candle Scanner, we abbreviate it to NCS, can do three main things. It can highlight, it can scan, and it can alert. There are 28 different candle patterns that will be highlighted in any time frame, in any market. You can scan for them, and you could be alerted to them. With purchase of the candle scanner, you would automatically be upgraded to the NCS Pro, which includes a few extra modules built in, including the intraday module, Forex module, crypto module, and the strict criteria module. And if you go to that link, candlecharts.com/NCS, you will see all the details. You will save hours and hours of time finding the best entry and exits by using the software. You'll automatically be able to see any of the 28 candle patterns, whether you want it in standard or in strict criteria. It will work in any market, whether it's stock, ETF, commodities, futures, cryptos, Forex, you name it, it works. Yes, it can be installed on a Mac. We provide you with the installation video, installation written instructions. We have a idea session that we just recently did. We have strategy videos. And for anyone who owns Nissen Candle Scanner, on this coming up Monday, I'm actually doing a video, a live session on the bouncing ball trade that I've been doing for well over a decade, and it works really well. And I'm going to be showing that Whether you use that strategy or not, up to you, but it can certainly be customized for how you want to handle that. So the great thing here too, it works on the NinjaTrader platform, which is a free charting platform. You can continue to actually trade in whatever brokerage account you want to. You would just be getting the advantage of using the software, the powerfulness and candle scanning software, and then still be able to trade however, wherever you'd like to. So the link there is candlecharts.com/NCS. And Steve, if you can flip over to the my candle chart slide, I'm going to go over that, and then I'm going to tell you guys about a great offer that you're going to want to take advantage of. This is my candle charts. This is separate from the software. This is our membership site that Steve was talking about, where, excuse me, we offer a variety of live sessions, a variety of recorded videos. Everything that we do live is also recorded and posted. But we do this and we post it because we have students in 85 different countries that we know about. And if you go to candlecharts.com/lifetime, you'll see all the information available for you. But let me just highlight some of the major things that you get by becoming a member. Every Monday and Thursday, we do a strategy session where Steve and our team of mentors of Nissan certified trainers will analyze any market you request. Okay, anything. Every day, Monday through Friday, we do a daily market recap where we hit the major markets, S&P, Dow, NASDAQ, gold, crude, Bitcoin, the Nifty index, things like that. Every Wednesday, we do an options outlook where we do a session on option strategies, how to apply them. Every morning, Monday through Friday, we do a morning trade setup where we go over a potential trade for that day. Every Tuesday, we do a Forex focus where we dive deeper into all of the Forex pairs. Every Sunday, we post a casual trader video for those that just can't watch the markets during the week, but you want to have information available for you as you prep for that week. We do a fun chart challenge every week video, so to make sure you understand candles in a fun way. And one of the best features, in my opinion, of my candle charts is the special topics. We have about 25 of them. They're all about 1 hour, and they go over various things, and you'll see the listing of them at candlecharts.com/lifetime. Things that range from exit strategies to using multiple time frames to a whole session on Nissan trading principles, meaning all of Steve's trading rules, and so many more. So you're going to want to take a look at that list. We have a charting widget, we have a weekly recap, and then a really fun thing, we just added this in. We just did our first session not too long ago, but a mentorship session where our team will come in and talk about a specific topic as requested by our students. We had a form filled out by all of our members. We got a lot of great feedback about what would help them, and we are going to have interactive mentorship sessions in a group setting. Again, all done online and recorded, so even if you can't be there live, you can go in and watch the recording. So that's candlecharts.com/lifetime. Now, because we do have Memorial Day coming up, and I didn't want you to purchase now and then find out that we were going to have a Memorial Day promo, what I'm going to do is tell you that you can save on either one, and I'm just typing in the coupon code. If you use the coupon code MEMORIAL, you'll save 15% on either the candle scanning software or on the My Candle Chart membership. Okay, so 15%, and also you will see when we send out the recording that there is a special bonus for people that go for a lifetime of either or both. And yes, I just got a question. Yes, you can use that coupon code to purchase a lifetime software and a lifetime My Candle Chart membership. So you use that code MEMORIAL, it'll save you 15%. And in a little bit after the session's done, we're going to be sending out the recording on a page that will show you a extra bonus that we're going to have, but it's limited to the first 25 people, and I believe that 3 people have already taken advantage of it, so I believe we only have 22 of these things left. So you're going to want to take a look at the link. We're going to be sending out the recording here shortly. So at this point, if there's any other questions that I can answer for you about either of these 2 programs, I'd be happy to do that. If not, I want to thank you for your time. Thank you, Steve, for analyzing those trades. Congratulations to those students that did submit There are trades to be analyzed, which is fantastic because that's really how you get feedback. And even though some of them were really good trades, there's always room for improvement. So thank you to everybody. Thank you to Steve, and thank you to all you students. Have a great night. Check out candlecharts.com/lifetime and candlecharts.com/NCS. And make sure when you purchase that you use code MEMORIAL to save that 15%. And take a look at that special bonus that you got coming out. If you have any immediate questions, you want to make sure you take advantage of that special bonus, you can always email me any questions, paul@candlecharts.com. Thank you. Have a great rest of your day or night, and we'll talk to you soon.